You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 16th day of February, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. When you do that, you also set a couple of other things in motion. Number one, you'll always have access to the chat box so that you can ask questions and participate in the discussion. Also, you'll get an email shortly before the broadcast starts each day, and in that email you will find a link, and when you click it, that allows you to join with one-click access. Okay. There will be days you're out of the office, away from your desktop. You can point any internet-connected browser to cfrn.net facebook.com/live, and there you will find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast at youtube.com/CFRN, and each and every daily broadcast is also archived there. So there's over 1,600 daily shows archived at youtube.com/CFRN. If you're listening to this after the fact via a podcast on iTunes or Spotify or iHeartRadio, if you're not driving or operating heavy machinery and you would like to be able to see the charts as well as hear the audio, just hit pause on your podcast player, point your browser to youtube.com/CFRN, and find the daily broadcast that you're listening to as a podcast, and suddenly it becomes a video cast. It really is that simple. So let's open with a word of prayer. Hope you all had a good holiday weekend, President's Day, and all that entails. Heavenly Father, we thank you today for your blessings, your mercy, and for your grace in our lives. We praise you for your goodness, for your generosity. We trust you for faithfully preserving us through good times and bad times. We serve you with all that we have. We glorify you in our plans and activities. We speak of you to others in response to your great love for us. We live for you in every thought, word, and deed by the power of your Spirit. You are the God of endurance and encouragement. Help us to live in harmony with each other, that together we may, with one voice, glorify you. In Jesus' name we pray. Amen. Okay, happy Tuesday. Let me give you the numbers from around the world. These are the cash markets, the indices. Starting here in the U.S., currently the Dow is down 4.5 points. Make that 2.5. NASDAQ down 88. S&P 500 down 9.5. Russell 2000 down 7.5. In the commodity basket, crude oil up 33 cents, trading 59.80 last. It's a gain of a little over 0.5%. Gold down $26.80, trading 17.9640 last. That's a drop of about 1.5%. And silver down 9 cents, trading 27.23 last. In the Asian markets, at the close, Nikkei posted a gain of 383 points. It's a gain of 1.25%. The Shanghai gained 51. That's a gain of 1.5%. And the Hang Seng added 573 points, which is a gain of almost 2%. And in the European markets at the close, FTSE was down 7.25. DAX was down 44. The CAC was up less than a point. That gives us a green day in Asia. It is a mixed day in the UK. And it is a red radio Tuesday so far here in the US of A. With that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, we'll cover the logic alerts, the concierge trade alerts, all that, and answers to your questions when I come back. Michael, are you ready? Okay. If not, we'll just jump right over to a daily chart of the S&P until he is ready. Okay. S&P 500 Emini Futures. Let me open this up a little bit. And whenever you get in, pop in, Michael, just let me know. Now, we've had inside days and outside days, and we've had outside days followed by inside days. And then we had Friday, which was the 12th. And the market put in a pretty stunning upside performance, closing on the high of the day at 39.36 and a quarter. Now, Sunday night Globex open, which is the Monday candle. Even though there were no U.S. markets, foreign markets were trading as normal, and so we had concierge trade alerts Sunday night and logic alerts. And then when the markets opened last night, Monday night at 6 p.m. Eastern, then that was the beginning of the Tuesday session. And as you can see on the Tuesday session, we now have an outside day. This is also a bearish engulfing candle. Those terms are interchangeable. And basically it means that the high of today's candle, these are daily candles, today's high is higher than yesterday's high. And today's low, lower than yesterday's low. We've already come down through blue and climbing. You know what, let me refresh this. On your daily chart, if you leave your charts running all the time, when you sit down to go to work, you should always refresh that daily chart, because it somehow gets a little bit out of whack. There we go. So we've come down through blue and climbing. We're sitting right on top of the step line. So that's potentially good support. Now, these numbers that you see here, first we're going to have to again adjust the fibs up to encompass the new all-time historic high. So yesterday, which is really interesting that this happened on a U.S. holiday, U.S. markets were closed, and yet the markets still managed to put in a new all-time historic closing high. Now, you've probably heard me say before that back in 2005, when I moved from equities to futures, Globex was the thing. It was called a shadow market. Nobody talked about it much. You never saw any major moves begin or end on the Globex session. And I certainly don't know if this is a record or not, but it possibly could be. On a day when U.S. markets are closed, nothing but Globex, a new all-time historic closing high at 39.52. So we opened last night. We go just a little bit higher. The new all-time intraday high is 39.59 and a quarter. The closing high from yesterday, 39.50. And that just might stand for a while, because if this current candle that we have, this daily candle, it's all, even if it closed right here right now, that would be a bearish engulfing candle. And after this stellar run to the upside, that in and of itself would be huge. But if we close below the step line, then the next place that we would really look for support would be this swing low right here at about 38.85. What's the low of that candle? 38.84 and a half. Okay, so you might jot that number down. That could become very important. Now, since we just adjusted the all-time high, that means our 24% Fibonacci retracement, which is the shallowest possible fib retracement, that is now at 37.84, and that's this line right across here. Now, the other numbers that you see, we've connected this low that was put in on October 30th, connected it to this high right there. Okay, let's make sure we're still connected to the low. Yep, that looks about right. Fibs are an area, so you don't have to worry about getting them too absolutely perfect. You know, do the best you can. So from the low to the high, put in January 21st, to the retracement low, put in on February 1st. That gives us Fibonacci price extensions. This is areas above where price has never been before that the market may potentially find good resistance. Now we also have on here just this last leg up. That also has to be adjusted. Now this is a lot of lines for the daily chart, so I'll probably peel some of them off at some point. But let's get those matching. Okay. Now I gave you the 24% Fib retracement for the entire move up, and that's here at 37.84/85. But if we just measure this leg from the low to the high, that gives us a 24% Fibonacci retracement right at that swing low that I just pointed out, 38.8450, and this fib comes in at about 38. It's just above that high. Again, fibs are an area. So important spots to look for: if we get below the step line, then we've got this 24% fib retracement of just the last leg up. Below that, we've got the daily BBC, which currently lines up with this high and this high, and that's at about 38.58. If we get below that, then we've got these two areas here that overlap, and then here. And once we get below the BBC, then the potential for us to drop to the 24% fib of the entire leg up becomes a very high probability. So very important to see what happens here with this daily candle. Are buyers committed enough to their positions to come in, turn it around? This little trend line that we had connected across these tops, because it lines up right with that 38 right there, I think that's one of the things we can peel off right now. Right there. Michael, are you there? Okay, Michael's not there. Okay. Let's see if he messaged me. Nope, he just must be running a few minutes late. Valerie, did Michael mention to you that he'd be late coming back on?
Michael is here.
Oh, there he is.
Michael's been here for 10 minutes.
Oh my goodness.
That's okay.
Did you, was your mic off, or?
Yeah, the other mic was off. I'm sorry. That's why you probably didn't hear me.
No,
the other one was off.
we didn't hear a word.
Oh, no. Okay. Yeah, no, I've been here.
Okay.
I responded to Jake in there in the question box at 12:11.
Okay. All right. Well, we're glad you're here, and if you want to take it away, it's all yours.
Okay. Yeah. Here, I'll grab it right now.
And the website issue, there's an outage somewhere. I posted a picture of the thing that Squarespace sent me. It's back up and running now. I mean, you know, and when we said our prayer today, our opening prayer, guys, I didn't pray for all the people that are in Texas. I mean, we had partners last night that messaged me. They got no electricity. The windmills are frozen. I mean, pretty bad. And then I saw this morning there's really bad weather in North Carolina. How did it affect you?
Yeah. Well, we just got rain here. It was just rain and cold, but out on the out at the beach, they had a tornado last night, and apparently it did some damage out there. But that we just had rain. It was wet here, and today, right now, it's not raining right now, but that doesn't mean it's not going to rain, because it's been raining for the last week. Seems like get halfway into a project outside and you get a week of rain. Can't do anything.
Okay, doke. Well, I can see your charts, so you're locked and loaded, so I'll hit mute.
Okay.
It's all yours.
Okay, here we go. All right, good afternoon, everyone. Today is Tuesday, the 16th day of February, 2021. Before I get into that, let me go here. Let me go to the home page now because I think Dwayne just said it's back up. Good. So if you want to take a trial with us and you have not taken a trial with us, go to the home page at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that and it's going to bring you to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. All right. All right. Okay, the spreadsheet. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. All right. So here we go. As I said, today is the 16th day of February, 2021. We made 1 tick in crude, 88 ticks in gold, and 11 ticks on the ES. Put us at $1,027 this morning. Today it took 13 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 24 trades. So on the month now, we're at $8,640. That's over 11 days, averaging $785 per contract per 2-hour trading day. We have now gone 5 consecutive days of getting our goal, and 29 out of 30 so far this year. On the year now, we're at $22,975. That's over 30 trading days, averaging $765 per contract per 2-hour trading day. Okay. All right. Now I'm going to get into it from this side and go to the left. Okay. Now this is the weekly trading zone right here. And I was saying earlier, is this one below? No, the one above is the one I thought it was going to get to. Hang on a second. Let me scroll back. Let me go back to a larger time frame for just a second. Yeah, okay. This is the one that I was saying it was going to get to. It was going to go up to this zone and then come off of this zone, and it was working its way back to this zone during the session this morning. This was pretty much the whole thing. But let's see what we did this morning. Okay, here I'm going to blow it up so it takes up the whole screen and scroll it all the way back to where we started. Yeah, we started, it was really choppy. There was a shorting opportunity right there that would have given you some profit opportunity. A long that would have been a break even. A short here that stopped us out pretty much to the tick, and then it went down and did what it should have done. Then I was looking for price to get below here and work its way down. And it came back and started working its way up. Now we picked up 14 ticks on this to put us at +6 overall. We had a break even there. We missed that, and that. And then we picked up 4 more ticks here to put us at +11. I'm sorry, +10. We missed that one, and we grabbed this 1 tick right here toward the end of the session. The number that I was looking for it to get up to when it was actually going up was over here. I was looking for it to get up to 39.47, I think is what the number was that I was looking at. Never made it up there, but it did make it down to the weekly trading zone down below. And let's see, since then it's bounced off the weekly trading zone, started coming back up and gave a couple of momentum trades. There's one, yeah, just one momentum trade actually on the way up. So I would look for this to probably go back down to the weekly trading zone as it attempts to determine what direction it's going to go in. And that was a hard thing for the markets this morning. When they first started out, they couldn't figure out what direction they were going in. I know my lines aren't thick enough right here, but I'll fix that later. Let's see, on crude, we started out here. We missed the long trade. On the second one here, we picked up 1 tick on that crude. Now, I thought the crude was going to get up to, but I think it was going to get up to, I had a number in mind. I thought it was 60.30, something like that is what I was looking for, but it didn't make it up there. Anyway, down here, there was a short there and a short there, both of which I missed, along here that I missed and along there that I missed. Now this would have had a little profit, this would have had a little profit, maybe 1 tick on each one of those. This would have had more profit, like probably 5 or 6 ticks, and this would have been a break-even trade. Break-even trade, and that was that was pretty much what it gave up. During the break, if you took the bounce off the BBC right here, it was a shorting opportunity that would have been there. A nice profit right there. It was followed up by it wasn't actually a momentum trade, it was a short trade right here. That would have stopped you out. Okay. Now the gold, we had a whole bunch of trades on gold. So I'm going to go back to the beginning. All right. Our very first trade on gold was right here. And it stopped us out pretty much to the tick. And then it went up and did what it should have done. We missed the follow-up trade. But on this trade right here, we picked up 8 ticks to get us back to break even. Then we had a break even trade right there, picked up 10 ticks on that. We missed that trade. We picked up 14 there to get us to 24. Oh gosh. Then 8 ticks there to get us to 32. Then, okay, then it gets a little mixed up in here, but we went from 32 to 48, and then we stopped out, went down to 40, and then we went to 56. So the actual arrows and what actually happened are a little out of order here, and I knew that was going to happen because I had missed the one stop out trade. This one right here actually happened back here. We had all these break-even trades in between. And anyway, we went from 56 up to 66, picked up 10 ticks there, and we had a break even there. Then from 66, somewhere we went to 68, then we went to 78. I think this is where we went to 78. The next one, nope, this might be where we went to, we went from 68 to 78, then we stopped out, went back down to 70, then we went up to 76. It was a stop out. Then we went up to 76, then we went up to 88. Between these right here, we went up to 88. And that was where we ended the morning session at plus 88. This last one right here I had mentioned during the session. I had actually put it on, but I wasn't going to count it toward the session because it was taking too long to actually happen. But I did point it out by the time I was done doing the spreadsheet this morning. It had done what I thought it was going to do. During the break, there were some really nice trades here on gold. One there, there. Here the cycles are going up too steep, so you weren't able to get into any of that, but you can see gold was just tanking right here. And it's trying to recover some of that right now. There was a long right there, a long right there, and that was about it for the gold for today. Okay, let me just go see who's in here right now. Is Joan in here? She is not. Okay, all right, so with that, we'll go back here to the spreadsheet really quick. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 16th day of February, 2021. Made 1 tick in crude, 88 ticks in gold, and 11 ticks on the ES. Put us at plus 1,027 on the morning session today. It took 13 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 24 trades this morning. So on the month now, we're up 8,640. That's over 11 trading days, averaging $785 per contract per 2-hour business day. We did go last year, 237 consecutive days of getting the goal. We went 24 this year, and then we had 1 day that we didn't get it. So now we've gone 5 consecutive days of getting the goal, and 29 out of 30 so far in the year. Let's see. Oh, there you are, John. You're on YouTube. Okay. Well, I sent you the link to get into the meeting. Okay. On the year now, we're at 22,975. That's over 30 trading days, averaging $765 per contract per 2-hour trading day. Okay. If you have not taken a free trial with us and you want to, go to the homepage at cfrn.net. Scroll down where it says free 5-day trial, no credit card required. Click on that. And when you do, you'll be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. So you got to click on that link. All right. All right. That's it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona. It's Studio A of Wilking South Mountain, America's largest city park. Wayne, if you are ready. And there he is at the ready.
Ready. Okie doke. Recap of the recap.
I am going to jump over here. Refresh of that. And watch.
Okay, recap of the recap.
Today it took 13 minutes and 3 trades to get to $100 per contract. 13 minutes and 3 trades. Thank you. Thank you.
Now, what Michael teaches you guys in the morning in the room, okay, whether it's him running the room or on the days that Valerie fills in, the idea is to teach you how our strategy and indicators work, the methodology, the strategy, the underlying principles. We use a fast chart in the live training room so that he's able to show you as many setups that meet the criteria as possible during each 2-hour class. It's 2 hours a day, Monday through Friday, 9:30 a.m. to 11:30 a.m. Eastern. We also provide you with round-the-clock alerts. We have a static report that comes out at the beginning of each Globex session, and then we provide alerts around the clock. The purpose of the alerts is to show you living, breathing examples of windows of opportunity so that you can practice what Michael teaches you in the room in the morning. Now, the alerts come out when I say around the clock. Globex session starts at 6 p.m. Eastern. So last night at 6 p.m. Eastern, that began the Tuesday session. This afternoon at 5 p.m. Eastern, that will end the Tuesday session. Tonight at 6 p.m. Eastern begins the Wednesday session. And that repeats itself over and over, again and again. So what we're offering you is an opportunity when you purchase a passport. What we're offering you is the opportunity to learn our methodology and our strategy, and then we provide you with living, breathing examples around the clock so that you can practice what you've learned in the room. The worst thing you could do is try to jump in real quick because you're anxious and start trading real money. Okay, that's not the goal. It's not what we want you to do. In fact, our 24/20 blueprint tells you specifically what we want you to do when you first get started. Number one, you need to show up in class, and then you should put together 10 consecutive days in a row where you reach your goal in 10 trades or less before you go live. Now, the blueprint will give you the green light to go live with one contract only after you've put together 10 consecutive days in a row in the simulator. Now, if you're in the room in the morning and you're not really paying attention to what Michael's saying, but you're just listening for him to call out a trade, and you want to piggyback on that and try to trade it, you're going to quickly become frustrated because it's a fast chart, and by the time he sees the opportunity and can call it out and can move his mouse, and then you receive the information over your speakers or your headset, and then you tell your hand to go to your mouse, you're always going to be a couple clicks behind. So what I want to encourage you to do is to focus more on what he's doing, why he's doing it, so that you start to understand. Because if your focus is on just trying to keep up with him, that'll be frustrating. But if you'll shift your focus to understanding what he's doing, why he's doing it, why that is the trade setup. Every question that can possibly be asked has already been asked, and there's an answer for it. Okay? So when you're new and you have questions, type them in the chat box. The more you get involved, the more questions you ask, because people always want to know, how long will it take me to learn? Well, everybody learns at a different pace. But the more involved you are, the more questions you ask, the sooner you'll get there. You can watch videos of people trading all day long. That won't teach you how to trade. You can watch videos of Mark Spitz swimming all day long, and that won't teach you how to swim. In order to swim, you got to get in the pool. In order to learn how to trade, you've got to start putting on and taking off trades. But we want you to do it in the safety of the simulator so that you don't lose money and blow up your account. Now, if you follow the rules, if you put together those 10 consecutive days in a row, the way the blueprint lays it out, that's no guarantee that you're going to be successful, or no guarantee that you won't blow up your account. However, if you follow those rules, you'll have to work really hard and break a lot of rules in order to blow up your account. Everybody has had enough of that, I'm sure. Most people who show up on our doorstep are beaten, battered, bruised. They've been misled. They've been made all kinds of, ridiculous promises. And when somebody's new to the world of trading, because they have no understanding of markets, they develop unrealistic expectations. Sometimes a new person will come along and I'll say, okay, what's your goal with trading? You want to learn how to trade. What's your goal? I might hear something like, well, I want to take 20 points a day out of the S&P. Now, why would they say that? Well, because they probably read it or heard it somewhere else, or some kind of website was promising that they would teach you how to do that. And while the S&P does move enough over the course of a day for you to actually take 20 points, it's not a realistic expectation. So part of the training is to help you understand what is realistic so that you can have realistic expectations. The goal in the morning in the room is just 2 points out of the S&P or the equivalent thereof in some other market. 2 points in the S&P is $100. On the Dow, it would be 20 points at $5 a point. Crude would be 10 ticks. Gold would be 10 ticks. Those both pay $10 a tick. Now, the blueprint also teaches you that once you do go live with the one contract, after you put together your 10 consecutive days in a row, once you do go live, your goal is to increase your account balance by $2,000. Once you do that, then the blueprint gives you the green light to add a second contract. The difference between the first contract and the second contract is you're adding the second contract with profit you earned in the market trading one contract. The blueprint will also let you know when it's time to add number 3, number 4, number 5, but you're always adding one at a time, never more than one at a time, and you only add additional contracts with profit you actually earned in the market. So you can see that following that model, okay, does make it difficult to blow up your account. If you have 2 days in a row where you do not reach your goal in 10 trades or less, after you've gone live, then you immediately come out of the live market, you go back into the simulator. That's not a walk of shame. It's a smart business decision. And you book a mentoring session with Michael, with me, with both of us, so that we can go over what's happened the last few days with each and every one of your trades. We need to help you understand if it's something that you did, maybe because you didn't understand something about the methodology or the strategy, or perhaps market conditions just were not conducive at that time for trading. Our indicators do a good job of helping you find high probability, low risk trade setups. But once you understand how to read them, they also do a good job of keeping you out of trades that aren't high probability, low risk. This is a business based on probabilities. Once you understand that, then all you need is a definable edge. Now, what's a definable edge? Well, a definable edge is anything better than a coin flip. Coin flip, we know, 50-50. Anything better than that's a definable edge. We like to think that our edge is substantially better than a coin flip. But number one, understand it's a business based on probabilities. Number two, learn the definable edge that Michael teaches you every morning, 2 hours a day, every trading day. And then using your simulator, your demo account, use the logic alerts and the concierge alerts to practice what you have learned, because the goal is to teach you how to find these windows of opportunity yourself. So far this week, we had a holiday yesterday, but because Globex was open, we still did the CTAs Sunday night, still did the logic alert Sunday night, and then again last night. So we're currently in week 133. So since the Globex opened Sunday night at 6 p.m. Eastern, I've had a total of 21 alerts. 2 never triggered. Still waiting on 1. That gives us 18 actionable alerts. So far, nothing stopped out, but that's not typical. A typical week, we'll see 20% stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure. Now, a lot of methodologies and strategies have some different formulas for setting your stop loss. Some use a percentage of the ATR. There's all kind of different ways to do it. We keep it simple. We use market structure. In other words, we literally ask the chart, okay, if I'm going to enter here based on market structure, where does my stop loss need to be if I don't want to risk more than $300 per contract per trade? There's 3 steps to the process. If you go through all 3 steps and you can't find a suitable stop loss, then you have to wait for that alert to trigger again. Once an alert triggers, there's a higher probability of it triggering again and even again than not triggering again. So you can wait for it to trigger a second or third time, or you can look at a different alert, or you can look at a different market. Once you understand how to find these windows of opportunity, you don't have to wait for an alert to come out, because you know how to do exactly what we do. When I send out an alert, I have to build in time for people to finish whatever it is they're doing, get to their computer, get their charts up, get the thinking cap on, get the trading cap on, look at the alert, look at the chart, understand why the window of opportunity that we've selected is in fact a window of opportunity. Price trades from support to resistance, back to support, back to resistance, back to support, again and again, over and over. It has since the inception of the markets, and it always will, unless they change the underlying principle upon which these markets operate. These are auction style markets, and what I mean by that, you got buyers on the bid, sellers on the ask, and you got price channeling back and forth, back and forth. If there are more buyers than sellers, price is going up. If there's more sellers than buyers, price is going down. That seems awful elementary and awful simplistic, but that's the truth about trading. Now, when people make it seem more complicated than that, it's usually because they have a lot of solutions to sell you for all of these problems that maybe don't even really exist. So let's take a look at last week, which was week 132 of Logic 247. We had 57 total alerts, 7 never triggered, 1 carryover, 50 actionable, and of that 7 stopped out, which was 14% based on not risking more than $300 per contract per trade, less when possible, using that 3-step methodology. So last week was not a typical week. A typical week would be 20%. So Sunday night, Globex opens 6 p.m. Eastern. The channel opens and it remains open around the clock till Friday afternoon at 5 p.m. Eastern. So the first alert coming out of the gate was to be long the S&P. The way you read it, this is alert number 6,489. That's how many windows of opportunity we've showed since we launched Logic 247. Long at 39.44, initial target 39.46, second target 39.50, third target 39.60, final trade to target 30.74 / that should say 30.75. That was last week's highest weekly. No, it should read 39.74. Yeah, / 39.75. That was last week's highest weekly zone. Now the number you see up here in parentheses, that's where the market had, because this was a long, so this was the swing high when Valerie came through and did the recap. Okay, and this is what the trade was worth at that point. Now once she comes through and does the recap, the market may continue higher. It may trigger 2, 3, 4, 5 more times, but we only track the first trigger, whether it reaches that initial target or whether it gets stopped out. Often we'll have, a trade that gets an alert that gets stopped out, and then the second trigger, takes off and goes the whole distance. But we record the first trigger. So even, if the second or third trigger runs the entire distance, we don't count that. It's there, and you should learn how to be very much aware when an alert triggers for the second, the third, and the fourth time. The additional triggers often present you with less risk and potentially more profit. And you must practice this again and again and again. When you're in the simulator, nobody's watching you, nobody's grading you, nobody's judging you, and the fear of losing money is taken away because you're not trading real money. You're in your demo account, in your simulator. Now, when your phone makes that sound, the telegram sound, DDD, or your tablet or your PC or your Mac, that's not a call to trade. It's a call to go look at the alert, look at your chart, make sure you understand why that's the window of opportunity. The more times you repeat that process, pretty soon you'll get to the point where when the Telegram alarm sounds, and Telegram is just a messaging client that we use for all kinds of different things. When it makes the Telegram sound and you go and do what I just explained, look at the alert, look at your chart, understand why that's a window of opportunity. The more times you repeat that, pretty soon, instead of it being an alert, it becomes more of a confirmation. In other words, you're probably already marking up your chart or putting in your order before the alert even comes out. And when you see that window of opportunity, because remember, I'm building in additional time for everybody to get the alert, get to their chart, do everything they got to do. But once you understand what the window of opportunity represents, then by the time this trade hits 39.44, you might have already, you might have gotten long at 39.40. In fact, we'll go to the chart in just a minute and we'll see where the earliest point is that you might have gotten in using our methodology, our strategy, our indicators, and everything Michael teaches you every morning in the room. So the first alert, and this is Mountain Standard. Telegram reads the clock on your computer. So if you're on the East Coast, it'll show East Coast. If you're on the West Coast, it'll show West Coast. And if you're in Arizona where they don't do daylight savings time, we don't. Well, let's see, 4 months out of the year, I'm on Mountain Standard, and 8 months, I'm on Pacific. So after the S&P came the Dow, the Russell, the NQ. When you see the Z's, that means no trigger. No trigger. Silver. This is one I goofed up. And now we roll into Monday morning, midnight. No, yesterday afternoon, yeah. S&P, alert number 6,496. To be long, 39.54. Initial target, 39.56. Second target, 65. The final trade 2 target, weekly trading zone. On every long, the final trade 2 target is the weekly zone overhead. On a short, the final trade 2 target is always the weekly zone below. Now, on Sunday nights, we're still using the previous week's zones because the zones get published Monday morning at 6:15 a.m. Eastern. We've published the zones for our members since December 14th of 2009. Now, on a Monday holiday, like we had yesterday, the alerts come out Tuesday morning, okay? So, at this point, yesterday afternoon at 6:20 p.m. Eastern, we were still using previous week's zones. That's why you see 39.74/75. All right, and here's the Dow. Buy, initial target, second target, final trade 2 target. Now this is a sell. B is buy, S is sell, T is initial target, WTZ is weekly trading zone. NQ, buy, initial target, potential resistance, weekly trading zone. Crude oil, it says hedge crude. That means up above, if this is a short, there's a long above that hasn't yet triggered. I'm going to put you guys on hold 1 second. Okay, I'm back. All right. So, up above, there's a long on crude, but that one hasn't triggered. And the market is now positioning itself where it may potentially drop instead of moving higher. So, it's very easy to have a window of opportunity above and a window of opportunity below. So, when you see hedge, that's what that means. There's already a long window of opportunity above. Now we've detected window of opportunity below. So you want to be short 59.84, initial target 74, second target, third target, final trade 2 target. Short on gold. Hedge on the Russell. Now this is a long hedge, so that means up above there's a short. Here is the S&P short. Now we've rolled into today, the 16th. It's the S&P, the Russell, the Dow, the NQ, still waiting, gold, and the Dow. Okay? It's that simple. When you hear the telegram sound, open telegram. read the alert, go to the chart, and understand why that's a window of opportunity. And if you don't understand, that's when you post in the discussion group, hey, the alert that just came out on the Dow, help me understand why the window of opportunity is from 31,510 to 31,490 to 31,445. And either myself or one of our other traders, because everybody learns the exact same method, the exact same strategy. There's no secrets. We don't play favorites. Everybody gets the same treatment as it should be. I'm not there to answer your questions. Based on our simple methodology and strategy, one of the other traders will be able to answer it for you. Okay? So now that you've seen the individual alerts, that puts this in context. Since Sunday night at 6 p.m. Eastern, 21 alerts, 2 never triggered, waiting on 1, 18 actionable. So far, based on a $300 risk profile using market structure, nothing has stopped out. That, of course, will change before the week is out. Now, we have another alert, but it's not an around-the-clock alert. It's called the Concierge Trade Alert. The CTA is designed as forward guidance for the entire session. If you want to grab a screenshot, you can. So Sunday night, we had CTAs, even though there was no Monday session, because Asia opened, London opened. There just was no Wall Street open, which makes it really impressive that we put in a new all-time historic closing high on a U.S. holiday. That just shows you how much sway the global markets have these days compared to, like I said earlier, when I first started trading futures back in 2005. Now, each CTA, now these numbers are good for the entire session. You should go to your chart in the markets you trade, put 2 lines in the sand. Put one here, 39.55, one here, 39.27. As price starts climbing to 39.55, that's bullish. So you'll be looking for long opportunities on the way up to 39.55. Once you get to 39.55 and above, then you only want to be looking for long trades. On the short side, if price starts dropping towards 39.27, that's bearish. So once price is below the BBC and is moving towards 39.27, you want to start looking for short opportunities. And then once you get to 39.27 and below, then you only want to be looking for short opportunities. So we've already covered the daily chart for the most part. Let's peek back at it one more time. We're off the lows of the session. See how price came right down to the step line. It traded through blue and climbing. And for anybody who's new, this green line is called the BBC, just stands for bull bear cross. When price crosses below it, we're bearish, looking for lower prices. Then when price gets above it, we're bullish, looking for higher prices. The red and blue line is called the CFMA1. I refer to it as red and falling, blue and climbing. Red and falling represents resistance. Once that kicks into gear, price is going to have to fight to get through it. So once price gets below the BBC and you have red and falling, that's the perfect storm for finding short trades, of course, on your smaller time frame. And then when price gets back above the BBC and you have blue and climbing, you'll see how price just climbed the back of blue and climbing all the way up. Now we had, since the last candle that had closed below the BBC was November 3rd, and then we have all these pullbacks where the pullback holds. On this day we spike it, but buyers drive it back up by the close of the session. So we've got a wick sticking out below the BBC, but no close. Now that repeats itself a number of times until this day. This was a big day, because this was the first day that we closed with a red candle below the BBC since, well, you can see how we started out above and then we ended the session below with a red candle. That happened right here on October 26th. But the last day closing below was actually a green candle right here on November 3rd. The following day we got above it, had the support of blue and climbing, and we've been climbing ever since. We had this one close here below the BBC, and at the time this drop, based on this being the all-time historic high right there, we dropped to the 24% fib, bounced 30 points. Next session open, we dropped back to the 24% fib, bounced 30 points, and then we took out the 24% fib. Now that area, because we have new all-time historic highs, this area where the market found support here and here, you can see that's now the 38% fib retracement based on the entire move from the low put in on October 30th to the new all-time historic high put in today. But if you missed the first part of the show today, that is a bearish engulfing candle. Okay. If you haven't learned candle speak yet, we have a free resource. It's called The Secret Life of Candles. There are about 200 different candlestick signals, but some of them are so obscure you might only run into them a few times in your life, so no sense trying to remember all 200. But there are 10 basic candlestick formations that you'll see on a very regular basis. One of the most important is the doji, and there's a number of variations of the doji. But get with Valerie and let her know you'd like to get access to The Secret Life of Candles. And if you're on a trial and everything, she'll get you all hooked up with that. Okay? And then print it out and keep it handy. Don't, you'll remember the names over time, but the names are not what's important. It's what the formation is telling you that's important. Bullish engulfing, that's in my opinion, the strongest reversal candlestick signal that you'll see. But what's really important now, we have the bearish engulfing, but the question is where are we going to close for the day? Are we going to close below the step line? If buyers are driving price up. We had a low on the session of 39.1875. They've already driven price back up to 39.31. If they keep pushing this thing, it won't change the fact that it's an engulfing candle. But if they were to drive it all the way up and we close the session with a green body, now that seems like a stretch at this point, but you got to embrace all possibilities. Anything can happen. If buyers are committed and continue to push, then this will still be an outside day. It'll still be an engulfing candle. Okay, it just might not be bearish engulfing because you don't have any red. You've got green. I'd be surprised to see that happen, but I've been surprised more than a few times. If we take out the low of the session, then the next major area for support is this swing low right here and this swing low right here. Okay, now fibs for just this last leg up from the low put in on February 1st to the high put in today, right here is the 24% fib, right where I drew this little rectangle. Maybe I'll slide that over a little bit. Yeah, like that. Now, these other numbers you see are Fibonacci price extensions, and I won't go through that again because we already covered it. If you missed that at the beginning of the show, after the show, it takes usually an hour or two for the video to render and show up on YouTube, but you can go back and watch any of the daily shows. Over 1,600 daily shows are archived on the YouTube channel. Okay, so we look at the daily chart whenever you begin your trading session, whether it's in the morning, the afternoon. You know, we've got traders around the world, and so our day session is their night session, vice versa. But when you sit down to trade, do yourself a favor, go look at the daily chart, not because you're going to trade off of it, but you want to know where the important or major resistance is. And right now we know major resistance is at the all-time historic high, and we know that major support is at today's low, 39.1875. If 39.1875 is taken out, then a drop to 39.02, and then a drop down to 38.85/86. Okay. Now this candle here had a low. It's hidden behind the step line. That is 38.78. And then you've got the daily BBC, which currently, you can read it right here, it's at 38.58. Now, this high right here, now let's use this high. This high right here, because we had a leg, we had a retracement, we had a slightly higher high, which now that I'm noticing that high was 38.59.75, 38.62 1/4. So we need to adjust that to right there. Not a big difference, but, and again, fibs are an area, so you know, don't frustrate yourself trying to get it drawn exactly perfect. Just get it as close as you can. Okay, so we know where important resistance is, today's high. We know where major support is, today's low and the step line, and then below that, right there, 39.04 area, 38.87, 38.62. Now these numbers will all come into play eventually, as long as this remains the all-time historic high. If this changes, then these fib retracement numbers will change to embrace the new all-time historic high. So with that, let's go to the 30-minute chart of the S&P. Okay, now these are still last week's weekly trading zones. 39.30 I think was a zone for 2 weeks. Yeah, on the week of January 31st, it was the highest weekly trading zone. Last week, it was the next to the highest weekly trading zone. And this week, it's not a weekly trading zone. This week's weekly trading zone is 39.20/21. So, because I don't want to go through and have to change all the colors right now. So I'm just going to use this, 39.20, and then by tomorrow I will fix the zones. 39.20. But everybody got their zones this morning, and hopefully you've got them on your chart by now. Zones are an area, just like fibs. So 39.20/21. Okay, so that's a current, we'll call it CWTZ, current weekly trading zone. Okay, now the one you see down in yellow, that's from a previous week, 38.85. That goes back to the week of January 24th. And it's still on the chart because it has remained important week after week, like last week. See how it came right down? touched it to the tick. See? So as long as it, remains important, I will typically leave it on the chart. For a week, couple weeks, I think there's been times I've left it as long as a month because it continued to hold sway over the market. So what did we do? We came down, we had a bearish cross. Okay, this is what Michael teaches you in the morning in the live training room. He's simply using a faster time chart. Okay, like up here, price pulled back to the BBC, up close by the open of the next candle. That candle opened at 52.25, and it went on to put in swing high at 58.5. So you hear him do this again and again, over and over every morning. Price pulls back to the BBC, up close by the open of the next candle, 52.25. And from 52.25 it went to 58.5, so that's 6.25 points right there over the course of 1, 2, 3 30-minute candles, so hour and a half. Now, getting out at a swing high or swing low, that's difficult because you don't know it's a swing high or swing low till after the fact. So we have what's called an exit signal. Up here, the step line is on the left side of blue and climbing. But price, which has been climbing, starts to walk sideways. And so as price walks sideways, this step line, see, it steps up and over, up and over, up and over. And then it steps up, and then it steps over, steps over, steps over. So what's happened is the step line has gone from the left side to the right side. Once the step line is on the right side of blue and climbing, you're looking for the first red candle that closes below the step line. That's called the exit signal. Okay? Because there'll be times where you're trading where there is no alert. You're just simply watching the chart, looking for windows of opportunity as your understanding progresses. And so, again, there's nothing to tell you to get out at the swing high because we don't know it's going to be a swing high or swing low till after the fact. But as price walks sideways, the step line crosses over. The first red candle that closes below the step line, that's the exit signal. And the closing price of that candle is $39.57. So using the method that Michael teaches you in the morning, entry 39.52.25, exit 39.57. Okay. Now, you could put all other kinds of indicators on this chart. You could get some oscillators going. You could get some algorithms cooking. Get some crystal balls, all that stuff. It won't change the outcome. It won't change what I just explained. You can make this as complicated as you want it to be, or you can let it be as simple as it can be. Most traders come from a background heavy laden with lots and lots of indicators, lots and lots of oscillators. I have enough voices in my head, telling me what to do without having a bunch of indicators on my chart, screaming at each other and fighting over whether price is going to go up or down. Okay? Price can only do three things: go up, go down, and for a period of time, walk sideways. Okay? So then we had a bearish cross. Now, this one little example I showed you up here, okay, this whole move started with a bullish cross, just like you see in the morning. Okay, you had a bullish cross, price pulled away, price pulled back to physically touch, up close, that means green candle. Okay, so if I get that out of the way, you can see it. So we come back, we touch, there's the green candle we're looking for. Open of that candle is 39.12.75, and The final trade to target would be the weekly trading zone overhead. Now, if you enter here, as you're moving up, you're going to look left to see where there are potential obstacles in your path. So if you entered at 39.1275, by the time you get to this area of resistance, there's about 5 points of movement there. You could elect, it's your business, it's your choice, you could elect to just take profit here. Hey, that's 5 points, that's a great day. You know, my goal's only 2 points a day. I'm just looking to build the number of contracts I trade over time. Or you could stay with it. Okay, that's a choice. The next candle, if you chose to get out, the next candle, now don't be looking back. Don't be, you know, tearing yourself up with what you left on the table. Oh man, I'm a knucklehead. I should have stayed with the trade. Look what it did. It shot right up to the final trade to, you know, don't do that to yourself. Don't look back. Okay, just take advantage of what's in front of you. So back over here, bearish cross, price pulls away, price pulls back to physically touch, down close, sell the open of that candle, which is 39.51 and a quarter. Bearish cross, price pulled away, price pulled back to physically touch, down close, sell the open of the next candle, which is 39.51 and a quarter, and the weekly trading zone below is 39.30. That's a 20-point move. Now, we hit this week's weekly trading zone. We still don't have an exit signal. Now, I explained to you about the exit signal for a long. A short is identical, it's just in reverse. As price is dropping, you see how the step line is on the left side, and not blue and climbing, but red and falling. So the step line stays on the left side till we get to last week's zone, and now it looks like the step line wants to cross over, but we're not looking for a red candle this time. This time we're looking for the first green candle that closes above the step line once it crosses over. Now the step line hasn't crossed over yet. You know, if we go sideways here, if we consolidate, if we get one more candle, then that's gonna, price is gonna drag the step line over to the right side. So then, if you are long from back up here, that would be your exit signal. That would be the chart saying this move appears to have run out of steam. You might want to take a profit. But again, don't look back at this and go, oh man, I should have, you know, woulda, shoulda, coulda. That's no way to trade. It's no way to learn how to trade. Okay? You always do your best. And whatever happens, it's just another trade. Let's see, Mike B got a question. Your daily ES chart shows yesterday's candle that I do not show, and your candle that is printing today is bearish, and mine looks like a doji. I'm not sure what kind of charts you're running there, Mike B. I'll go back and show you mine again. This is futures. Maybe you're looking at a cash index chart or something. I can't say for sure. But, and you say you don't have a candle for yesterday? Okay, the fact that you don't have a candle for yesterday tells me that you're probably looking at the S&P cash index. So you need to figure out on your platform how to find, because if you don't have, you're saying that you don't have a candle for February 15th? Who's your data provider? What charting platform are you using? I have one of those platforms, I think, or Swim, but I don't have it up and running. So you need to go in there and you need to find futures, because futures traded yesterday. futures opened at the regular time. The Globex market opened at the regular time. Maybe the charting package you have isn't Globex. Maybe it's not showing you 24 hours. Yeah, then check with your data provider because something's amiss. Because my charts match up with everybody else in the audience. So maybe give them a call. Maybe give them a call and ask them why you don't have a candle for yesterday. That would be my best suggestion. Hopefully somebody will answer the phone and be able to give you an answer. Okay? Okay. So, back to the 30 minutes. Now, remember the concierge trade alerts. 2 numbers, 2 lines in the sand. 39.55, 39.27. 6:25 p.m. Eastern is when the numbers came out last night. So 6:25 p.m. Eastern. 6:25. That's going to be this candle right here. February 15th. This is a 30-minute candle. And so CTAs came out during the life of this candle 5 minutes before that candle opened. Right there. Okay. So, and let me do this so the arrows don't get confusing. That arrow is showing you an exit signal. And this is showing the Globex open and when the CTAs came out. Okay, so your first line in the sand, 39.55. And 39.55 is right there. Okay, so from 39.55, price traded up to 58.5. So that's a 3.5 point move. And then price on this candle, the low of this candle was 55.25. The low of this candle is 55.5. And so we did not have a candle here that dipped back below the trigger until this one. So we didn't have a second trigger on this one. Okay, it happens. The short side is 39.27, CTA number. 39.27, right there. Now remember, these numbers are forward-looking guidance for the entire session. Everything between these two numbers is the market trying to, make up its mind. The buyers and sellers, order flow, that's what determines price. Okay, is it going up? Is it going down? More buyers going up, more sellers going down. So everything between these lines is the market making up its mind. Okay, so we did manage to break above it. We actually put in a swing high at 59.25, so 4.25 points. Now, once you understand the methodology and the strategy that I just explained, okay, price pulls back to the BVC, up close by the open of the next candle, okay, which is 52.25. So getting long at 52.25 would mean you had 2 3/4 points before the alert triggered. Now there would have also been a logic alert. So let me show you how you layer those together. Okay. The logic alert that came out 20 minutes after the Globex opened last night was to be long 39.54, initial target 56, Next target 65, final trade to target. So you've got the CTA saying 55. You got the logic saying 54. Okay. Now sometimes the numbers will be identical, and sometimes they won't be. Two different methods are used to derive the two different sets of numbers. Okay. The logic alerts, the CTA. The point I want to make here is that when you have two different methodologies, if you will, pointing their finger at the same important price, important area, you really want to give that a, pause and give that a second look, because that's typically where you'll find your highest probability, low risk trade setups. And that's how that worked out. Now, the next short on the S&P from the logic side, let me scroll down and find that. Here we go. So this morning, window of opportunity appeared, so I notified everybody. 39.34 to 39.32 to 39.30 to this week's weekly trading zone at 2021. So while the CTA, would have green lighted you here, the logic is 39.34. So let me show you 39.34. 39. So this logic alert, 39.34, the initial drop took us down to 31.5. So 2.5 points. So 2.5 points. Price gets back above the trigger. Triggers a second time. Important prices, important areas, almost always tested. So the second time it triggers, it drops right down to the CTA number. Okay, and this is a great example. So you see how price dropped right to the CTA number. In fact, let me make those stand out. Yeah, there we go. All right. So logic, one trade, back above the trigger. Logic, second trade, okay, right to the CTA number. And this happens a lot, so you want to be prepared for this. Price walks right up to that important price, important area, turns around, goes the other way, and gets you back above the logic 247 trigger at 39.34. And so that drop to 27 is 7 points. So we have a 2.5 point move, and we had a 7 point move, and when price hit the CTA number, it bounced it all the way back above the trigger. And what did it do? Triggers again. So we got 1, 2, 3 triggers, one logic alert, and the swing low here was 39.27.5. Okay, buyers came in, bounced it. Not quite enough to get it back above the trigger of the logic alert, but this time we come down through the CTA. We hit this week's weekly zone. When price drops to a weekly zone, we expect it to be good support. When price rallies up to a zone, we expect it to be good resistance until proven otherwise. So again, that and that, those are last week's weekly zones. This is current weekly trading zone. So price did exactly what we anticipate, exactly what we teach. Price drops to a zone expected to be good support until proven otherwise. So what's the high probability move from here? Well, the swing high of this candle was 39.34 1/4. So that put you back above the trigger. Now, if you just trade the S&P, you've obviously had numerous opportunities in this session to reach your goal for the day. So whether you're still trading or not trading, I don't know. But do you see that we got an exit signal here? The step line is now on the right side of red and falling. That's showing some strength in the market. It looks like what price wants to do here is to rally up to the BBC. If it can do that, if buyers are committed enough to drive us up to 3940.26, you'll see an alert come out in the logic channel, because then we'll have a window of opportunity to the downside. The pullback to the BBC holds more often than it doesn't. If price somehow is able to get above the BBC and then hold a pullback from above, that would give us a window of opportunity up to about 39.53. If buyers are not committed, then it looks like we could come down and trigger the CTA again. But important to understand, the market just gave you an exit signal. Step line crossed over. Actually, on this candle, the step line was in the process of crossing over. So I would really want to see this one close green right here if I were waiting for an exit signal based on wherever you might have entered the market. So the current weekly trading zone above, we've got one here at 2021. Above that is 48.49, which is right here. Current WTZ 3948/3949. Okay. If buyers can drive this up to the BBC, and if they can push it through the BBC, then we expect this to be good resistance. Just like coming down, we expect it to be good support until proven otherwise. Okay, and so what did price do? It came down, it hit the zone, it bounced to the BBC, which we expect to be good resistance. So these are 30-minute candles. So price tried 1, 2, 3, 4, 5, 6. It took the 7th attempt to break that support. But once we get below that support and we've got red and falling, then that opens the door from this current weekly trading zone to this current weekly trading zone. So from 48 to 21, let's see, 48 to 28, that'd be 20. So what do we got? About 26 points, zone to zone. Here, it's Tuesday, so I'll use my calculator. Let's see, 39.48 minus 39.21, 27 S&P points. Zone to zone, S&P pays $50 a point. Now see, buyers, here they come. Okay, this is definitely going to be an exit signal. Well, no, it's too early to say because we just got a brand new candle. You know, if you wanted to consider that's your exit signal, that'd be fine. Okay, but it looks like buyers have a interest in being committed at least to get us back to here. 39.40. If they keep driving, okay, what was once support becomes resistance until proven otherwise. Okay, so that's a very detailed explanation of the CTAs and the logics from last night. The rest of the markets, I will just kind of move through those briskly, because guess what? Everything that we do, everything that we teach is fluid across all markets and all time frames. What does that mean? What that means is, when in the room you see Michael has 3 charts up, he used to have 4 or 5, I think. When he jumps from crude to the S&P to gold, whatever, you don't see him scrambling to change his indicators, to change his time frame. He doesn't change anything. The rules don't change. The strategy doesn't change. The underlying principles don't change. These are auction style markets with buyers on the bid, sellers on the ask, and price channeling back and forth all day long. Okay, that's as true on the S&P as it is on the Dow, the Russell, the NQ. Now, there are people who'll tell you that you can't trade all markets the same because they have different personalities. I don't even argue that point anymore, because it's not relevant to what we do. I just agree now. I go, yep, they definitely got different personalities. But we're not looking for a relationship. We're looking for a high probability, low risk trade opportunity. And the markets were very kind and presented a number of beautiful textbook trading opportunities last night. Okay. Now, see how important it is to let your decision-making candle finish its job. If this candle closes red, then that's a whole different story than if it closes up here. This is where 2 things come in that are very important for a trader. And they're 2 things that we can't give you, sell you, loan you. We can try to help you discover it. It's called patience and self-discipline. Most traders see this and it's just like, they just want to pull the trigger. I just want to pull the trigger and put some green on the screen so that I can feel good about myself because I had a profitable trade. It doesn't matter if the next trade's profitable or unprofitable, because it's just another trade. As long as you're using a hard stop and you don't blow up your account on the next trade, there'll be another trade right after that, and then another one after that, and then another one after that. Now, the beautiful thing about having a strategy that you know and understand that can be used across all markets and all time frames means that there's almost always a trade setting up somewhere in some market. If you're brand new and you just want to focus on the S&P, or you just want to focus on gold or crude, that's fine. Absolutely nothing wrong with that at all. But as time moves on and your skill level increases, you'll be waiting on the S&P to set up. But out of the corner of your eye, you'll see gold and crude and something else set up, trigger, run to the target. And they say necessity is the mother of invention. I think sometimes frustration is the mother, because you'll go, man, I just watched 3 other markets have a bullish cross, price pulled away, price pulled back, up close. If I had entered on the open of the next candle, I'd have my goal for the day. Stop. Now you're turning it into a woulda, coulda, shoulda. Don't do that. However, you've just discovered a very important thing. Hey, maybe what that guy said, maybe that was actually true. Maybe these markets do move the same. They have different personalities, but the leg and the retracement and the leg and the retracement and the leg and the retracement, it's the same. It is. But don't pressure yourself. Don't push yourself. Don't put the cart before the horse, because that's awkward for the cart. and the horse. Be patient with yourself. Stay in sim till you put together those 10 consecutive days in a row. When you do decide to go live, only go live with one. Follow the blueprint. Work with that one contract until your account balance is $2,000 more than when you started. Then add the second contract with the profit you earn trading one contract. Now, I dilly-dallied around because I wanted to see what would happen. Okay, remember, this thing looked like it was going to the moon. Now, I told you earlier that there's, so far, our sample size with Logic 247 is 6,509 windows of opportunity. Okay, now, every one of those is a trend trade as defined by a 30-minute chart. When we're below the BBC, when price is below the BBC, we anticipate lower prices. When price is above, we anticipate higher prices. When price is above the BBC on the 30-minute, we're only looking for long windows of opportunity. And when price is below, we're only looking for short windows of opportunity. Okay. Counter trend trades, there's nothing illegal, immoral, or fattening about a counter trend trade. They just don't have the same high degree of probability that a trend trade does, in my opinion. Okay. And so that's why every alert is a trend trade as defined by a 30-minute chart. Had we taken this counter trend, and honestly, it looked pretty good, right? But we see what happens. Okay. Now, just trading with the trend in and of itself, that's no holy grail. But at least you have the prevailing winds at your back, pushing you higher, pushing you lower. You're not swimming, like a salmon swimming upstream. You're not tugging on Superman's cape. You're not spitting into the wind. You're just going with the flow. So as we get through this old weekly zone, as we drop through red and falling, as we take out the low of that candle, because understand this, okay, this candle closed here, it opened here, it was a red candle all the way down to here, and at that price, buyers were attracted, they came in, and they bid it up, and they took it higher over an hour and a half, 3 30-minute candles. Okay, so getting back below red and falling is important. Getting below the low of that candle is important. Then that opens this window of opportunity right here from 27 down to the current weekly trading zone below, which is 3920/21. And some might say, well, why not just enter right here? Why not go short right here? Because this price is dropping, red and falling, okay, you want that to be on the right side of price. Right now it's underneath it. See how here it's on the right side of price? And now it's underneath it. Even though it's red, it could serve as potential support. So we have to exercise the patience and the self-discipline that I mentioned. We want to get below there, get below there, and then window of opportunity. See, our product is not the trades that Michael trades in the room. Our product is not the alerts. Our product is teaching you how to find windows of opportunity in the marketplace. It's that simple. Please don't make it any more complicated than that. Because with so many voices and so much noise and so many indicators and oscillators and opinions and all of these things, it's so simple, or It's so simple to make it so complicated. They make it very simple to make it very complicated. On the other hand, we've worked very, very hard to try to make it simple. So if you still have hangover from previous methods and strategies and runes and gurus and whatnot, clean house, okay? Just forget that stuff for the moment. I'm not saying it's bad. I'm not saying it doesn't work. I'm just saying you need a clear mind to embrace this simplicity. Because if you can clear your mind long enough to embrace this simplicity, at some point you'll shake your head and go, wow, why did I make it so difficult? Well, it's not your fault. You were taught to make it difficult. Because the more difficult it appears, the more stuff people can sell you. Okay? And we don't have anything. Our only product is the passport, which gives you access to everything we do, and unlimited one-on-one mentoring, which means when you need help, you just book a mentoring session. 45 minutes with me, 45 minutes with Michael. New people sometimes will book 2 sessions a week. Then it falls off to 1 a week, 1 every other week. But what it never falls off to is when you have an issue or something you need help with that you didn't get in the room or the afternoon or on the Thursday night workshop, you don't submit a support ticket and ask a question. You go to the site and you book the mentoring session, or you get a hold of Valerie at 949-42-EMINI or support@cfrn.net. And I've automated booking the mentoring session with me. Michael has a hectic schedule, so you and him will, via email or by phone, will arrange a time that works for both of your schedules, and you'll get the help you need. Okay? Now, I know that there's other places that say they have one-on-one mentoring. Well, the reports I get back are sometimes that one-on-one mentoring is reduced to go watch this video or purchase, you need, I see the problem. You haven't purchased. Why didn't you purchase module 4? That wouldn't have happened if you do you want me to put you down for module 4? You've heard, the spiel. It really insults your intelligence, and that's something that we won't do. We won't insult your intelligence. No upsells, no new breakthrough discoveries every other week, that cost you another $1,000. Our passport, I think, is very fairly priced. It's $5,000, $49.97 to be exact, right? But then you're done paying us. You don't have to pay us anything else. There's no additional fees, no weekly, monthly, annual, recurring fees. And everything that we do, everything that we teach, you have unlimited access for life. Now, we don't know how long life is. Mine or yours, whichever comes first. Okay? But there's 2 of us, 3 of us. So, I guess the probabilities are pretty good. Now, see what we're doing? Being patient. Because the market hasn't given us a clear-cut signal to do anything. Based on where we sit now, that clear-cut signal would be price dropping through red and falling, okay, taking out that swing low, coming down through 39.27, and then, consider taking your profit as you approach the weekly trading zone. If we look left, we can see there's another potential area for support over here, 39.09. We have a weekly trading zone at 39.07/39.08. Everything we do is based on logic. There's no mystery, no secrets. Current weekly trading zone, 39.07/39.08. And this one was 2021. Price trades from support to resistance, back to support, back to resistance. The weekly trading zones, you should think of those as fixed support and resistance. The indicators provide you with dynamic support and resistance. See how price pulled back to the BBC? Dynamic support. See how price pulled up to the BBC? Dynamic resistance. Okay. So again, no matter how itchy the trigger finger, be patient, exercise self-discipline, and wait for the window of opportunity to open, and then take profit before it closes. Now, if all of a sudden there was a huge momentum move to the downside, could you trade through this zone? You could. But in most cases, that's not what's going to happen. Only 3 things happen at a weekly trading zone. The most likely thing is consolidation. Second most likely, beautiful example, rejection. When this 30-minute candle closed, the only thing left touching the zone was the wick. So price got rejected at the zone. Up here, price consolidated. Now, I said 3 things can happen at a zone. Consolidation, 70 to 75% of the time. Rejection, 15, 20% of the time. The only other thing is called the slice. That's when price slices through a zone like it's not even there. Over here last week, we had a zone of 39.30. Okay, what did price do? It sliced through the zone, and then it pulled back to the zone it sliced through, and it continued in the direction of the slice. So there you go. All right, now let's fly through the rest of these, because we're out of time. We go back to those CTAs. There we go. Okay. So on the Dow, the long side was 31,630. $31,630. Okay, 31,630. And then we had a weekly trading zone overhead at 31,660. 30-point move. Triggered. Went to the zone. Only 3 things happen at a zone. In this case, it was rejection. Okay. So a 30-point move, entry, 31,630, final trade to target, 31,660. It's 30 points, $5 a point on the Dow, $150 per contract traded. The short side was 31,385. Okay. Now, remember the CTAs are forward guidance for the entire session. Everything in between is the market making up its mind. So we had a swing low right here, 73. So from 85 to 73, it's about 12 points. Okay, it takes 20 points in the Dow to make $100 per contract traded. And that's what will happen. Now here, the CTA, we glided right through it. Here, price poked its head below the trigger, didn't like what it saw, reversed back up to last week's weekly trading zone. Remember, last week's zones are still very much in play. early in the week. So prices bounced. It didn't make it all the way to the BBC. It found resistance at that zone. And so that creates a window of opportunity right down here. Oh, roughly 31,420 to 31,400. 31,420 to 31,400. It's 20 points, $5 a point, $100 per contract traded. But keep in mind there were Logic 247 alerts on the way up and Logic 247 alerts on the way down. The Logic alerts are based on current price action, while the concierge trade alerts are based on historic price action. Current price action versus historic price action. And when they both point their finger at the same important price, important area, that's where you'll find your high probability, low risk trade setups. The goal is to teach you how to find these yourself. You don't ever want to be dependent on somebody to tell you when and where to get in the market or to get out of the market. No, you want that power for yourself. You want to be able to sit down in front of a screen, understand what's happening, and see where the opportunity is. If you just hear somebody call out a price and you click a mouse and it actually does whatever it's supposed to do, that doesn't make you a trader, okay? I don't mean that in any kind of offensive way, because that's how you start. That's how you learn, okay? It's part of the process. What I don't want you to do is I don't want you to get stuck in that part of the process. I want you to continue to grow and mature, okay? So yeah, in the beginning, sure, you'll practice in your simulator at the pre-identified areas, but the goal is that you start to see these for yourself. Because once you can see what price is doing and understand why it's doing it, nobody can ever take that away from you. It's a life skill. Okay. So again, got to exercise patience and discipline. That's potential support. That's potential support. Here's the window of opportunity. Okay. All right, next on the Russell. CTA last night for the Russell was long, 23.19, and we never got there. On the short side, it was 22.87. Okay. Important prices, important areas, almost always tested. So we come down through 22.87 and we put in a swing low, 22.80. Okay, so that's 7 points, $50 a point, $350 per contract traded. Important prices, important areas. So what does price do? It gets back above the trigger. Triggers a second time. On the second trigger, we drop down to a previous weekly zone at 22.78, support, buyers step in, they drive it up to 22.86. The CTA is 22.87. So this bounce comes 1 point shy of getting you back above the trigger. But that's okay, because you know how to handle that once you learn the methodology and the strategy, okay? And price is consolidating here for quite a while. We have a current weekly trading zone at 22.65/66. And when price drops to a weekly zone, we expect it to be good support until proven otherwise, and this is an example of rejection. Consolidation, most likely. Rejection, second most likely. The slice, third and least likely. Okay. So next on the list is crude oil. Okay, now that was last week's highest weekly trading zone at 59.10. The CTA last night for crude was to be long at or above 60.85. We never got there because the alerts came out during this candle right here. The CTAs came out. Short side, 59.30. Again, not unusual for price to come right down to a CTA, reverse, heading the other direction. Now, right here, you see how these indicators are running parallel to each other on this 30-minute chart? When that happens, it's a good indication that conditions right now are not suitable for trading. Okay? There is a window of opportunity opening to the upside. Okay? We've got blue and climbing here. We're above the BBC. So if on crude I were looking for an opportunity, it would have to be on the long side because I'm above the BBC. So 60 up to 60.10. Okay? 10-tick window of opportunity. $60 to 60.10. You get the idea. So CTA never triggered on the long side, never triggered on the short side, everything in between. Is price making up its mind. The long side was 60.85, so let me put that right there. Okay. All right. So who's more committed, buyers or sellers? When we break this line or that line, we'll have a good idea. Now, we may not break those lines before the new set of CTA numbers come out tonight. Now that we're above the BBC, if buyers are committed, they'll take out these highs. We'll get an up move, but then we have to be careful because we're running into resistance. Okay, right here. All right, 2 markets left. No, 3, but we'll do them quick. NQ. All right, long side for the NQ last night was 13,888. Now they came out last night on this candle right here. And that candle's 13,888. And we had a swing high at 13,900. So from 88 to 900, 900 and a half, that's 12 points, $20 a point. It's $240 per contract traded. Short side is 13,794. Okay, from 13,794, triggered once. And from 94, we dropped to 75, almost 20 points. Had it gone another couple points, it would have been 20 points, and that would be $400 per contract traded. Price gets back above the trigger, and this time from 794, it drops to 716. So that's about 80 points, $20 a point, $1,600 per contract traded. If you've earned the right to trade 2 contracts, you can do the math. Now, last week we had highlighted this area as potential resistance, right? And so it struggled. It finally got through. See all the times it tried to get through, right? And it's all off this bearish cross. When price returns to the area where there was a bearish cross that led to a substantial move, we expect that to be good resistance until proven otherwise. These are 30-minute candles. There's 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, a lot of candles, right? Trying to get through that area. We finally get through. We hold the pullback, and off we go, right? Okay. Now, on this move down, look where we found support. We spiked it, but that area was support. Okay, so from support, we bounce back above the trigger, but we still have red and falling. Okay, so we bounce above the trigger, and we've dropped so far from 794 down to 753. So it's about 40 points, $20 a point, $800 per contract traded. You've earned the right to trade 2 contracts at $1,600. You could do the math. But I can't stress enough. Don't go live until you've put together the 10 consecutive days in a row. Once you do that, only go live with 1. Increase your account balance by $2 grand. Use those profits to add your second contract. Never add more than 1 at a time. Only add when you're supposed to add. And only add with profit you earn in the market. If you follow those simple guidelines, it'll save you a tremendous amount of grief, and it will give you lots of opportunity to practice self-discipline, self-control, patience. And without those, it's not possible to be a successful trader. Okay, 2 markets left. Here's gold. The long CTA last night for gold was 18.29. Okay, never triggered. The short side was 18.13, right here. Important prices, important areas, almost always tested. So from 18.13, we dropped to the last week's weekly zone below, because this week's zone didn't come out to this morning because of the holiday. So if all you were looking to do was just trade to the trade to target, the weekly zone below, from 1813 to 1808, because the zone's 07/08, so that's a $500 per contract move. Price then gets back above the trigger, but not all triggers are created equal. Over here, we're below the BBC, and we have red and fallen. Here, we poked above the trigger, but that also put us above the BBC. And above the BBC, we're only looking for longs. So in this case, we would need to wait for price to get back below the BBC before we consider being short down to this zone, or this move actually dropped to the next zone. So we went from 1813 down to this zone from last week, which was 97/98. So it's basically a $1,400 per contract move if you stayed in it all the way down. And you could have made a decision here. If you want to re-enter, you got to wait for price to get back below the BBC. And then that gives you this beautiful zone-to-zone window of opportunity. That's a 10-point zone, 9 points, $100 per point, $900 per contract traded. Okay. Okay. And I think the only one we missed was silver. Silver been consolidating a lot sideways here lately. possibly the calm before the storm. The long side on silver was $27.94. When silver moves $1 in price, if you're holding a large contract, it's worth $5,000. A 2-penny move is $100. So $27.94. The swing high was $28.07. So 7 and 6 is 13. So about $600 per contract traded. Silver's volatile, margins are high. Be very careful. Now, big picture, if you've been tuning into the show any length of time, you know that we have some, really big ideas about silver throughout this year. I had not prophesied, but had certainly said I thought $50 silver was possible by March. We're approaching March. Now, there hasn't been an official alert put out or anything like that, but I still believe that once price in silver can get above $30 and hold the pullback, I think the move from 30 to 50 could be very brisk. Okay, that's almost more of an investment than a trade. Always consult with a licensed investment professional before making any investment or trading decisions. Trading's risky. I know you read it on every website you go to and you hear it, and sometimes people just put it there because the law says they got to, but we put it there because we want you to really understand it. Okay? There's no holy grail. If this were easy, everybody would do it. It's not. You're going to have to apply yourself. It's probably the most difficult job you'll ever learn how to do. It can also be the most rewarding. Okay? Go slow. Keep it simple. Exercise patience and discipline as you learn, and that will help you become a trader. The short side for silver is $27.34. CTA $27.34. Okay, $27.34. So it triggers and it drops to $26.87. So that's about $2,000 per contract traded. Is that right? $27.34. Well, if it went from here, let me just do the math. 27.34 minus 26.87. It's about a $2,500 per contract move. Again, silver is very volatile. Margins are high. Be careful. Okay. All right. Okie doke. Albert, I answered your question. We're interviewing software companies, possibly opening our own exchange. So in Telegram, shoot me a direct message and I'll invite you to the channel we have for that purpose. Okie doke. What's left? Good word for the day. That's where we always wrap it up. We talked last week, 2 days in a row, about the Bible and your health. Today we're going to talk about the truth of creation. Who do you believe, science or the Bible? And is it possible they both tell the same story, but in a slightly different way. I recommended a book last week, The Signature of God by Jan Jeffries. It's a good book. You get a chance. I don't think Grant's around anymore, but it is if you consider yourself maybe not a professional Bible scholar, but you enjoy studying the Word, rightly dividing the Word of truth, I think you'll enjoy Signature of God. Google it up. Genesis 1:1, we're all familiar with that. In the beginning, God created the heavens and the earth. A growing number of educators and scientists around the world believe the biblical account of creation. Now, I said educators and I said scientists, not just the faithful. Educators and scientists believe the biblical account of creation. Now, we know that some don't. I see Powell talking right now. I don't know if this is a live feed or not, but no. No, I think they were just replaying something he said. Okay. A growing number of educators and scientists around the world believe the biblical account of creation. They point us back to the truth of these words. In the beginning, God created the heavens and the earth. The question, evolution or creation, becomes clearer when you rephrase it as accident or design. Self-declared atheist Sir Fred Hoyle, professor of astronomy at Cambridge University, said this: the chance that higher life forms might have emerged in this way through evolution is comparable to the chance that a tornado sweeping through a junkyard might assemble a Boeing 747 from the materials in the junkyard. And he continued. Now, this is a self-declared atheist, Sir Fred Hoyle. He continued, the likelihood of the formation of life from inanimate matter is 1 to a number with 40,000 zeros after it. It was big enough to bury Darwin and the whole theory of evolution. There was no primeval soup, no primordial ooze, neither on this planet nor on any other. And if the beginnings of life were not random, they must therefore have been the product of purposeful intelligence. Even evolutionist Stephen Hawking, one of the most respected scientists since Einstein, acknowledged this: the universe and the laws of physics seem to have been specifically designed for us. If any one of about 40 physical qualities had more than slightly different values, life as we know it could not exist. Either atoms would not be stable, or they wouldn't combine into molecules, or the stars wouldn't form the heavier elements, or the universe would just collapse before life could develop. So, as a Bible believer, never apologize or compromise when it comes to the truth that says these words: in the beginning, God created the heavens and the earth. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.